AB InBev is spinning off its Asian business, looking to raise nearly $10 billion by listing shares in Hong Kong. It would be the world's largest initial public offering so far this year. Shares of AB InBev itself rose more than 2% in today's trade. Frank Holland takes a look at this strategy.
Brewing giant AB InBev, which sells Budweiser, Guinness, and Corona beers in Asia, is betting big on the region. That's because sales in China are up just about 8%, while sales in the U.S. are only up about 1%. In the short term, this partial IPO is expected to help reduce AB InBev's debt, increasing the company's standing with investors. In the long term, this gives AB InBev a stronger presence in the biggest beer market in the world. Last year, Chinese consumers drank twice as much beer than Americans, according to Evercore data. Analyst Robert Ottenstein says the market was previously dominated by low-end brands, and AB InBev essentially created the premium and super premium segment in this region. CEO Carlos Brito also telling the Financial Times this IPO could be part of a strategy to grow by acquiring competitors in Asia, just as it did in Latin America. Brito saying, quote, "The number one reason to do the listing is to have a platform in the region that is seen as closer to those markets and connected to what the region will do." It's a strategy that Jefferies analyst Edward Mundy agrees with, writing, "We believe this offers greater flexibility to do M&A in the region. Local players might prefer local." Already the largest brewer in Asia, AB InBev is hoping that this listing will help it keep growing. For Nightly Business Report, Frank Holland.